Hello, everybody. It's Randy Selzer here. Welcome back to the podcast. Welcome back to my YouTube channel. Today, we have a very special guest. Denise Pisani is joining us again. She's been on the podcast before, and she is one of the best known mortgage brokers in Mississauga, one of the top mortgage brokers in Mississauga, and indeed in the entire GTA. She's registered with a company called Get a Better Mortgage, and she has her own company called Mortgage in the City. So, welcome back, Denise. It's so nice to see you.
Thank you. Thank you for having me back, Randy. It's been a
Well,
while.
I know it's been
It's
a while for
time.
sure. Too long for sure. But happy new
Exactly.
year and always great to
Mhm.
see you again. Um,
Thank
so,
you.
so I was thinking we could talk maybe just to recap a little bit about the things that were announced back in September, some changes to the mortgage rules. There's actually three of them. And
Mhm.
I'm going to ask you a bunch of questions on this
For
because
sure.
you're
Yeah.
much more of an expert than I am for sure.
Mhm.
The first one, I think, is they've changed or they've increased the cap for high ratio mortgages, which used to be the maximum was $1 million, and now they've increased it to 1.5. And so that's going to help
Exactly.
us, I think, in the GTA for sure. And then the second one will be 30-year amortizations, which they've now made available to first-time buyers and also to anybody, whether you're a first-time buyer or not, anybody buying pre-construction, new construction. No
Mhm.
problem. So that's also a good one. And then lastly, something that I'm sure is near and dear to your heart is when people are renewing their mortgages, when it's mortgage renewal time, it's always been a non-event if you stay with the same bank. You can just simply renew your mortgage. But if you wish to change banks, let's say another bank was offering a better rate, you would have to pass the stress test, what we call a stress test. And
Yes.
we'll cover that one as well. And those are all in effect now. I think they came into effect, some of them on December 15th. So
Correct. Yes.
always changing. So,
Always
Denise,
changing.
yes. And
For the
so
better. For the better.
I think these ones are. Yeah, I think they really
Mhm.
are. And then we'll wrap it up at the end. We'll talk a little bit about our forecast for what to expect in 2025. And
Perfect.
okay,
That would be
so,
a nice closing for sure.
or we can talk as long as you want. We can talk
Yes.
about anything. No problem. So, first one. Okay, so this is a big one. And again, most of my listeners, some of them know, but some of them may not know that there was a cap in the past. People say, well, I can buy a house or buy a property for under 20% down, as low as 5% down. But there was a cap on that. Anything that was over $1 million, you
Well,
had to,
999,000. Your
correct.
offer had to be written up as 999,
Okay,
and then you can put down the minimum, which is 5% for the first 500,000,
right.
and then over 500,000, 10%.
Okay,
So, which would be the remainder 499,000
gotcha.
would be at 10%, and 500,000 would be at 5%.
Right,
So now they've increased it. So instead
right.
of 999, it's 1.499
See,
is
now
the cap.
there's something already that little distinction, but it's important that I never really thought about. But you're right. So at
Well, you know what? It could be
1.5,
1.5, but I would just keep it at
for
1.499
sure.
just to be under. Yeah, because that's the
Right.
cap is 1.5 for
Right.
sure.
So here in the GTA, where the numbers just came out a couple of days ago, that the average price of all properties was about 1.1 and a bit.
Hmm.
So this is going to help people who are buying in that price range. If they're buying
Right.
something over $1 million. Um, okay. So and that's taken effect and it's fully in effect right now.
Fully in effect. Yes.
Okay, so if you're talking to a client and they want to buy an average house in Mississauga or Oakville, maybe not Oakville, Mississauga, and they want to pay about 1.2 for a small house, they can
Right.
now they can now do that without having 20% down. Is that correct?
Right. So 1.2 minus the 500,000 is 700. So on the so it would be 70,000 plus 25,000 would be the minimum payment. So
Okay.
if they were buying for 1.2, did you say?
Yeah, just randomly. Yeah.
1.2, the minimum down would be 100,000.
Okay. Perfect. Perfect.
But
Oh,
they'd have to have a really good income to be able
yeah.
to support a mortgage for
Yeah,
1.1
that's
million dollars
yeah, it's a big
plus the
loan.
CMHC premium, which is 4.20, I believe. So it's quite a bit
It
because
is.
they've also, which I'm sure you're going to get into the next point, not only did they increase it to 1.5 million, they've also increased the amortization from 25 to 30 years to
Correct.
help with the payments. So obviously, the higher the amortization, the lower the payment.
Correct. Okay.
Right.
So let's move on to that one then. That's an important one. If you're a first-time buyer and you've been thinking about buying a property until very recently, whatever mortgage loan you could get would be amortized over 25 years. Correct.
Correct.
And what exactly is amortization so people understand? Some people might not know. What is an amortization on a mortgage?
Yes. So an amortization is the length of time you have to pay off this large loan. So car loans, for example, they're amortized over 5 years. I think some go to 7 years, as
Some do.
long as
Yeah.
7 years now.
Yeah.
But back in the day, it started in only 5 year terms for car loans. Now that's increased to 7.
Right.
And now mortgages we had 25 years and 30 years for people putting down 20%. But now the government implemented on December 15th or 19th, I can't remember the exact day, they increased it from 25 to 30 years, where we amortize and calculate the loan payments over.
So it's spread out more.
If you're putting less than 20% down,
Right.
then we can now go to 30 years. So they've added 5 years to help. So the longer the amortization the lower the payment will be. So now we've added 5 years from 25 to 30 to help reduce the payments, which will in turn help you qualify for more of a purchase price. So it's all helping young Canadians purchase, or older Canadians purchase, and help with the payments, increasing the amortization by 5 years and increasing the purchase amount from 1 million to 1.5 million.
Perfect. Now
that's all taken effect in December.
Okay. And I think I also heard from somebody that 30-year amortization is also available now for new build, for pre-construction. If somebody's
Exactly.
Okay, so that's an interesting one for sure. Even if you're not a first-time buyer, is that correct? If you're buying a new high-rise condo, can you get a 30-year am?
Yes, I believe you can. I'd have to look into that because I did for my client previously, but yes, I forgot if one of the spouses were a first-time buyer, but yes, it is. I'll look into that for sure. For an exact.
Yeah. Well, I know talking to builders occasionally, boy, have they ever changed their tune in the last 4 to 5 years. I know from my personal experience, and I'm not one of these mega platinum agents that buys 20 condos at a time. But I have worked with a number of builders, with my own investors who want to buy 1 or 2 units. And I can tell you that 5 years ago, they wouldn't even give you the time of day. They wouldn't even call you back. Now, builders are reaching out every day. Come and see our latest release of units. Come and see our penthouse units.
See that?
And they're offering
condos
incentives.
Are a little bit got hit quite a bit in the last year, right?
Yeah, they sure did. And they're offering incentives. They're increasing the commission for realtors, which nobody expected. And they're offering incentives to buyers, things like a free parking spot, free maintenance,
that's huge.
Free maintenance for a year or 2, depending on the builder. So you can tell that there's been an adjustment of their expectations there amongst the developers. They went from not having the time of day to even talk to you to now they're calling multiple times. Can you bring someone?
And I heard someone talking the other day about the micro condos in Toronto. They're having a really hard time selling them.
They are.
Like nobody wants that small space anymore.
Those are all investor driven, and if the numbers don't make sense, investors are out. They're going to be next to Ryerson or whatever it's called now, Metropolitan University, where they're renting out to these young people, and it's a 420 square foot room. It's like a hotel room. That's it, and those are hard. Like a normal buyer, if you want to live there yourself, probably would want something a little bigger than that.
Yeah, and there's lots of families moving into condos too now with children, so you need a little bit more space.
You can't do that in 400 square feet. No way.
Yeah, exactly. Yeah, for sure.
Lots of stuff in the market. We're going to talk about that. And the third thing that Chrystia Freeland announced, God bless her, when she was in place, was that they are now allowing some changes when you're going up for mortgage renewal, which is something that I don't get into too often, but I know you do. And as I mentioned, in the past, when you're renewing your mortgage, if you're with a certain bank and you're renewing it with the same bank, it was easy. You basically sign the
Right.
paperwork. The rates are what they are today, and that's it. You carry on with a new mortgage. But my understanding is if you wish to change banks at that time, let's say you're with Bank A and Bank B is offering a better deal, considerably better,
Right.
you would
It's
have to
always good to talk to someone at time of renewal because you
mortgage
don't want to
brokers.
sign what your bank is just going to
Yes,
give you on paper. It might not be the best rate.
right.
Whereas if you contact a mortgage broker, we deal with over 50 lenders.
I totally
We
agree.
know what the best rates are out there. So if
Right.
you're just going to sign a renewal notice that your bank hands over to you without doing your homework, finding out what the best
A lot of people
product
do that.
rate is or what you could
Right.
possibly get,
Yep.
then you're doing yourself injustice for sure. Like you need to shop around or talk to a mortgage broker. We get paid by the bank. Our client, we look for the best product for our client from beginning to end.
Yeah.
So that's what I need to do in order to get that Google review so I get more phone calls.
Oh, you
I need
get so many Google reviews, Denise. Every
I
time
need
I
to
look, it's
make
like,
sure
oh,
my
there's more.
clients
My
get the
goodness.
best rate from the start right to the end. So
Yeah.
even if they've signed papers at, for example, 4.5,
Yeah.
and 2 weeks, 3 weeks before closing, the rates drop, I will go back to that bank, make sure that they get the lower rate, or I will find a way to switch you out. So that's where you're not going to get that when you're dealing directly with your bank.
Absolutely not. And I absolutely agree with you. And people listening to this podcast or watching this on YouTube, pay attention to Denise because she is absolutely right. A mortgage broker is not tied to one specific bank. I'm not knocking any individual bank, but if
No, I use a lot of the big banks. I
yeah,
send a lot of business there, but
yeah,
my job, I know which bank is offering the lowest rate.
yeah,
So
yeah.
I can negotiate all of that for you when you all you need to do is hire me basically. There's no charges to deal directly with me. The banks pay me. That's a lot of mis
Conception, yes.
conception out there is where you deal with a mortgage broker, they
You have to pay
charge
them.
fees, but that is not true.
Right,
So our job is to find the best rate for
right.
our client, and once it closes, that's when we get paid.
No,
So there's no extra
I
charges that we charge the client.
100% agree with you. Now, the change that they made was in the past, if you were changing from bank A to bank B, you would have to pass the infamous stress test, where you'd have to be reapproved by the new bank at a point of an interest rate
2
that's
points.
2 points above what the actual rate is.
Contract rate.
So
So if
that
you
it locked you in, basically. Most people say, well, I'm with TD, so I guess I'll stay with TD because I don't have to pass the stress test. Or Bank of Montreal or Royal Bank,
right.
whatever.
Or they may not pass the stress test.
Or they might
Yeah,
not,
exactly.
right? They might not. So now that's been taken away, and you can switch from BMO to CIBC or Scotiabank, whatever, without going through the
It
stress
has
test.
to be an exact switch. So
Oh,
if you're looking for more money to
okay.
pay off a car loan or to pay off some credit card debt, then you do need to requalify with the stress test. So if it's a straight renewal, a straight switch,
You're
so if
something
you
else.
owe $300,000 with TD Bank
Right,
and you want to switch it over to Scotiabank,
right.
leaving it at 300,000, leaving the amortization exactly the same,
Okay.
you do not have to go through the stress test. But
If you want to consolidate your credit card at the same time, you got to pass the
then you've
stress
got to
test.
go through the stress test. It's called a refinance.
Denise, I've been in this business 30 years, as you know. I didn't know that. I actually didn't know that because
Mhm.
I don't get involved with renewals, right?
Yeah.
But that's very interesting to know. And I want people, again, pay attention here. You're going to learn stuff today.
Mhm.
So that's very interesting. So that's the third thing that got changed this fall that went into effect in December. And so how are you finding now? I know you're a very busy lady. You've got one of the top mortgage brokerages in the GTA. I know that.
Mhm.
And
Well, Get a Better Mortgage is one of the top mortgage brokers in Canada. The brokerage I work under,
right.
I have a little business that I work under, Get a Better Mortgage. But yeah, our brokerage is number 1 or number 2 in Canada. We're
Wow.
huge. Yeah.
Wow. And I know you've got
Head on.
an amazing office in Port Credit, and I'm going to
Yes,
point people to that, and I'll give them all your contact information in the
right in front
in
of
the description.
Brightwater. The new
Yes,
condos all going up.
I went
Yes.
into Farm Boy about a month ago, and I was blown
Oh,
away.
really?
What an amazing grocery store! That's the best
Yeah,
grocery
it's a
store in
really, and I'm right
Mississauga.
across the street. You
I
should have
know.
came in and said hi.
Yeah, well, it was a Sunday, but
Oh, okay. Well, I may have not have been there.
and you were probably off meeting with clients anyways. So,
Yeah.
but yeah, no, that's so true. So we're at
Yeah.
kind of a crossroads right now. I mean, it's been again, you and I have known each other since my old Remax days, way back in the early 2000s, when you had an office, a mortgage office in
Hmm.
Remax Professionals here in Mississauga when they still existed. And
Hmm.
we've seen it all, I think, hey, where we've seen the boom markets where every listing that comes out, there's 24 offers on it, and people overbidding and paying 100,000, 200,000, 300,000 over asking, where it was crazy. And a lot of
Hmm.
people in the past thought, oh, you realtors or you people in the real estate industry must have loved that. Not really. No, I didn't love nobody, no realtor that you
No,
talk to.
that it was so hard on
Oh,
realtors, mortgage brokers, especially the clients, like having to keep putting off multiple offers like that
yep,
on different properties. It's draining. It really
yep,
is.
it
So
is. So
that needed to
now
stop. Yeah.
everything changed. I think, just thinking about it, I think everything changed when COVID hit. Sort of
Hmm.
around 2020, COVID hit, and that changed everything. Everything shut down for a while. And then they started raising interest rates, and we had like 10 interest rate increases starting in the spring of 2022. The market went way down, which is what they
Hmm.
wanted it to do, I guess. Activity wise, price wise, it went down a bit. Although
Hmm.
the market we're in here, the GTA is so big, and you know this, that the market in Port Credit is completely different than the market in Scarborough. Like
Right.
there's no connection. It's
Hmm.
real estate, and whether on the finance side or on the marketing side, it's micro neighborhood kind of targeted. So what's going
Right.
on down there in the the glamour parts of Port Credit might be a stronger market and higher prices than even in Erin Mills, in if we're
Right.
talking Mississauga. So, but we're at a crossroads now. It's a new year, 2025. The Toronto Real Estate Board stats came out just last week, and they're kind of mediocre, really. I think
Hmm.
I wrote them out here. I think sales were up slightly, just slightly over 20. This is the year end for 2024. They were up slightly for 2023, uh, but prices actually went down. Prices were actually down
Hmm.
1%, I think, which is kind of weird because since the 10 interest rate rises we experienced, now we've had 5 interest rate drops in a row with Bank of Canada, which is good. And I think we're going to get another one at the end of January. What do you think?
I think so. I think a quarter point. Yeah.
Right. Okay. So that's going to, all right. I'm making notes there. So, but we're at a kind of a crossroads where we've got that issue. Prices did come down, but again, each neighborhood is different.
Hmm.
And you may find that in Mineola, prices may have, or in Forest Hill in Toronto, they may have stayed pretty solid. But in other places like Brampton, they may have come down a lot. And
Hmm.
I don't pretend to understand why, but they're all different. Every neighborhood is different, no matter where you are. In Oakville, too, there's
Yeah.
been big changes in Oakville, which I didn't expect.
Hmm.
Here we are. So everybody's predicting that rates are going to come down. Actually, one thing I'm going to ask you before we go with our forward with our predictions: what is the difference when the Bank of Canada lowers its rates? The variable rate mortgages come down right away. They seem to
Right.
be
Well, the
in
first
step.
of the next month, the
Right.
first of the following month is when your rate will
You're
get adjusted.
you're good. You're really good. Okay.
Hmm.
So, but when interest rates come down from the Bank of Canada, the fixed rates don't seem to move, or sometimes they went
No.
up.
So it's two different products. So the variable mortgage at the banks or your variable mortgage
Right.
follows the Bank of Canada's policy rate.
Right. Right.
So as those rates reduce and increase,
Right.
um, so will your variable rate that you have with your bank.
In line. Okay.
Exactly. But it's not directly related. That policy rate, when Bank of Canada has those announcements,
Yep.
does not directly affect fixed rates.
Right.
Fixed rates follow the bond market.
Right.
Okay. And the bond market follows, or the bond yields follow inflation employment rates,
Okay.
like different issues for the fixed rates. So
Right.
now yesterday it happens where that the bond market the bond yields increased. So which made
Okay.
the fixed rates increase. So the rates actually did go up yesterday, probably 0.15 to 0.20 points.
Oh, that's quite a bit for one day. Yeah.
Yes. So now they are very volatile. So because right now the economy is volatile. Like we don't know what's like Trump's inauguration is next week. We don't know what's going to happen with the rates.
All right.
Um,
So,
employment rates in Canada are at the highest they've ever been, which is affecting the rates.
right.
So we all thought that they were on their way down, but they just keep going up and down.
Yeah.
It's like a roller coaster right now.
Yep. That's the part that
And
I
you can
still don't.
find you can find a fixed rate anywhere between 4.19 to 4.69, roughly anywhere in between for a 5 year,
It's
3 year
not bad.
term.
You know what?
It's
That's not
not
bad.
bad, really.
When
It's
you,
really not bad when you think of it.
you
We're
know,
never going to get to the 2.5, 2%
you know what,
mark.
Denise? I'm happy about that. That's what got us into this trouble in the first
Yeah.
place. People saying, "Well, it's free money. It's 1.5%." You know, and,
Yeah.
and so let's overbid by 100,000. You know,
Hmm.
that's not helpful overall, and I think long term, especially for the next generation of young
Right.
people. You know, but yeah, that's one of the things that I've always had trouble understanding is the bond market and the difference between fixed rates and variable. Here's a question for you that we might have talked about a year ago or 2 years ago: fixed versus variable. Would you recommend either way right now?
If it were me, I'd go variable right now.
I've always
There's
gone variable. Always.
there's 8 meetings this year.
Yep.
The first one being next week, well, in a week and a half, January 29th, where
Right.
we're anticipating there's a lot of talk that they're coming down a quarter point.
Yeah.
Who knows? It could
Yeah.
change anytime, but they have economists have predicted a quarter point.
Yeah. I
So if
think it's
that's
going to
the
happen
case,
too.
we're going to be down from 5.45. So 545 minus a quarter is going to bring us to 520. And then you're going to have a discount off of that. So say it's 0.5, you're going to be holding at a rate of 4.7 variable.
Yeah. Which is
And there's
almost the same
seven
as
more,
fixed. Right.
yeah, there's 7 more meetings in 2025. So hopefully we can see another half a point drop. If
Yep.
if it comes down another half a point, then you're going to be sitting at 420. But always keep in mind when you're in a variable term product, you
Yep.
can actually lock into a fixed term anytime throughout the 5 year term.
True.
So if a year passes by and you look into the fixed rates and the
Yeah.
fixed rates are
Going up.
4%
Right.
and you want to just lock it in,
Right. You
you can
could.
lock into it at that time, or you can just ride it out for the full 5 year term.
Okay. Very good advice, I think. Okay,
Mhm.
so here's my prediction. And again, I'm just a realtor. I'm not a politician. I'm not an economist, but I'll give you my sort of idea of where we're headed. I am optimistic. I think 2025 is going to be a better year than 2024. I think for sure. The combination, the effect of lowering rates, and I said this to somebody else. I made this one up, that the real estate market is sort of like a big ocean liner. This popped
Mhm.
into my head one day. So that when all these rate changes are taking place, that ocean liner is in the process of turning, but it's a big ship and it takes time to turn. Even when rates
Mhm.
were going up, it took 6 months for the market to finally start slowing down. So it's like a
Right,
big ship
right.
trying to turn, and it takes time. It's not going to happen overnight when the rates go down. And some people were disappointed. Oh, the rates went down, but the market really didn't catch fire. No, it doesn't work that way. It takes time.
Mhm.
And I
Right.
think I think that's good. I think everything, and the three changes we talked about, I think those are all positive, and I think lowering rates are positive. In my view, the one uncertainty that I worry about still, and I'm still overall I'm positive, are the political things going on in the world. The chance of some big apocalypse, if there's some war somewhere. There's wars going on in the world. We got changes in the Canadian government taking place with Trudeau resigning, Chrystia Freeland resigning just over, instantly. and
Hmm.
Donald Trump, who is at best, I'll say he's unpredictable. We're not sure what he's going to do. I think if he comes through with those tariffs against Canada, that's not going to be helpful for us. But maybe he won't. We don't know. Sometimes he talks about stuff and he never actually follows through on it. So I don't
Yeah,
know.
we'll have to
That's as
wait and see
political.
for sure.
That's as political as I will ever get because
Hmm.
it's just. But there seems to be a lot of moving parts going on right
Yeah,
now.
it's very unpredictable, very volatile. There's a lot of changes that are going to be taking place in the next year in Canada as well. So
I think
we'll
so.
just have to wait and see. But I do feel variable right now is a good type of mortgage product to take, but everyone's situation is different.
Yeah, that's true
Like
too.
as a mortgage broker, when we're approving a mortgage, we're actually interviewing the client to feel them out and figure out what the best product is for them. We just don't throw them in the product. We make suggestions. And if I feel that a client, I can tell from interviewing the client, asking the questions, we have special questions that we're trained to ask. If if variable might not be suited for everybody, and it
Yeah.
is not suited for everybody, and if
There's
I feel that it's not, then we will suggest a fixed term, maybe a shorter term, 3 years is better than a 5 year variable. So they're in a shorter term. The rate is a little bit lower than a 5 year term. They're going to come due sooner. So hopefully in 3 years, when the mortgage does come sooner, the rates would have dipped to the lowest
yeah.
and they'll be coming due when the rates are at its lowest. And then they can reevaluate and figure out maybe, it's their second renewal, third renewal, and variable might be a better choice for them at that point.
Yeah.
But if they've got young children or someone's, the wife's going to be going on maternity leave, they're going to be half their salaries.
Yeah.
Variable might not be the best option for them.
Yeah.
So as a mortgage broker, we do have to evaluate and figure out whether the product is suited for the client. And every client is different.
Well, Denise, I can see how you get all those positive Google reviews. I honestly
Oh,
can. You take care of your clients. I know you do. You really
yeah,
do.
I do. I'm always a phone call away. I always receive emails and clients about, whether they should early renew, whether they should keep going, whether they, how much they qualify to move.
Yep.
So exactly, you have to be. It's not just a you know, one stop shop, help them with their mortgage and away they
Well,
go. It's being consistent and helping them throughout their whole life of their mortgage for sure. I want to see them pay it off. So hopefully, I am starting to see, I've been in the business long enough where I'm starting to see clients finally pay their mortgages off. But when you move, especially in today's day, with the
yeah.
prices being so much higher,
Yeah.
they may have to remortgage a small mortgage again when they do decide to move. So
Yeah.
yeah,
Excellent. Well, this has been great.
perfect.
We don't
I
talk
think our
often
next
enough.
podcast, Randy, should be on life insurance on mortgages because it's very important
Okay,
as
that's a
well.
great idea. And
Yes.
before I forget, I was going to say this earlier. I wanted to put a shout out off topic here a little bit. I want to put a shout out to a company called Feedspot.com. They are a podcast evaluator in the United States. They're in California. And recently I was humbled and honored to be recognized by Feedspot as one of the top 25 podcasts in Toronto, which is great, just being a little
Wow.
guy here in Mississauga,
Congratulations.
and one of the top 70 real estate podcasts in Canada. Are you kidding
Wow.
me?
That's
Thank,
amazing. And
well, it's
I've been on two, three of them.
at least. And after today, our ratings are only going to go up. So
That's amazing.
yeah, that was great.
Congratulations,
So
Randy. I
that's,
know how much this meant to you when you first started doing this. You really wanted
oh,
to take off with it
yeah,
and
it's
you've
a
done a
labor of love.
marvelous job.
Thank
Amazing.
you. Thank you. Well, again, when I get great guests like you, it's got to go up. People love
That's
this stuff.
amazing.
And so thank you. That was not a paid ad or anything like that. Feedspot.com. They also compile lists. So if anybody's interested in what are the top 25 real estate podcasts in Toronto, have a look at that. Go over to Feedspot and you can
I'd
find
love
out.
to see that.
There you go.
Thank
You'll be
you.
on all of them now.
Yes.
No,
Amazing.
no, you stay on.
No, just yours.
Okay. Thank you so much, Denise. Listen,
You're welcome.
always a pleasure. You have a great day and we'll see you again soon.
Thank
Bye.
you.
Next one on life
Bye-bye.
insurance. That's a promise.
Yes, life insurance.
Okay. All right. Bye. Have a great day.
Bye.
Okay. Bye.
Take care.